Hi everyone. This is a video I probably should have made several years ago. It's a good example of sometimes professional financial advisors assume that people know a lot of the things that we just take for granted, and it's not true. So I've been posting stories about clients' experiences in working with me, and I had a really interesting one this week where I was doing a review with a client and we were talking about their retirement funds, which were in mutual funds. And the client had asked whether they should be investing in stocks as well. And I had to ask, well, what do you think is in your mutual fund? And they really didn't know. And so that's on me for not having done a great job in explaining what mutual funds are. So I thought, I haven't even talked to you, my loyal audience, about what mutual funds are. So let's go back and see what actually is a mutual fund. So you can invest in stocks and bonds on the international markets, but what do you do if you don't have that much money? So years ago, this is back into the early 80s, people tried to figure out how they can do that. So let me give you an example. So if you want to buy shares in a company and the shares are trading at $50 a share and you have $25, you don't have enough money to buy even one share. And buying one share doesn't really benefit you that much anyway. So if you had $50 and you bought your share, one share for that $50, and it went up by $2 and you sold at 52, you made $2. It doesn't really give you a lot of bang for your buck. As well, investing in only one thing increases the volatility because then you're riding the market up and down of just that one thing. So the mutual fund was built in the financial world in order to create a pool of investors who would put all of their money together, and then that would what formed a trust, and then that trust would go and purchase units of all the different shares that were available. And so what you end up having is, you think of your mutual fund and you have all these little slices inside the mutual fund that are different stocks. So you might have Royal Bank RBC in there, and you might have Air Canada in here, and you might have Sony, and you might have Disney, and you might have some stocks from Europe, and you might have some stocks from South America. All these little slices are ownerships or equities in in stocks that you would have purchased. And you can also have bonds in there as well. So some of these can be bonds. So I have had a video about the diversification, but let me go a little bit deeper into this. So if all of your mutual fund is all equities, that is, they are all stocks, regardless of how much of each of one of them you have, that's what we call 100% equity. And that's a very aggressive mutual fund. It has great potential for growth, but it also has potential for loss because it's entirely tied to the equity markets. Now, if you wanted to have less volatility or less risk in your mutual fund, you might decide to say, I'm going to take 40%, so this wedge here, and I'm going to have that in bonds or other fixed instruments. Same thing, just like on the equity side, is you can have little slices of lots of different bonds so that you've got some spread out diversification within the bond market. But now you got 60% of the equity from all the different stocks holdings that you have and 40% in equity. So when you're thinking about, if you're looking at your mutual fund, whether you're investing at the bank, whether you're investing with me, whether you're investing with another one of the terrific financial advisors who represent another institution, when you own a mutual fund, you do own stock if some of it is in equity. So don't think that you're missing out. In fact, what you're actually doing is optimizing much of your dollar inside that mutual fund that's being managed professionally. They're buying and trading, trying to optimize the growth potential and minimize the risk within that. But you are participating. So that's a mutual fund. There's another way to do this within a segregated fund, and we'll talk about that the next time. because that's also a really important tool to use too. So hopefully this has been useful. If you've been sitting around thinking, what actually is a mutual fund? Well, now you know. So thanks for watching, and please subscribe. Send me a message. Let me know what other financial topics you'd like me to cover off.